What's up guys, my name is Sarah and in the last few weeks we have seen one of the largest bank failures in the US history. What makes this even worse is that this might not be an isolated event but start a domino effect on the global banking industry. We need to talk about what's happening objectively. How is this even happening? Is your money safe? And what can you do to protect yourself in these situations? Before we jump right into it, be sure to smash the like button and subscribe to this channel to not miss any future content. It helps us tremendously and we appreciate your support. If you like to get informed about these topics before I can make a video about it, feel free to join my Telegram channel where I am providing educational knowledge and tips and information about investing and mainly cryptocurrency for free since 2018. I'll put the link in the description down below and now let's start with the video. To start off this topic, we have to talk about Silicon Valley Bank. As the name suggests, Silicon Valley Bank was mainly focusing on providing funding and capital to startups and tech companies in Silicon Valley, mainly targeted to venture capital companies. There are three main components why the Silicon Valley Bank failed, and I'll tell you exactly what happened. In 2020, when the interest rates were close to zero, people and banks got flooded with new cash. And this is how the whole dilemma has started. The problem with this is that banks operate on something called fractional reserve. Fractional reserve literally means that they only need to hold around 10% of their customer funds in liquid assets ready for you to withdraw it when you want. With the other 90%, the bank usually tries to make a profit by lending it out to other people or companies or by investing those 90% into return yielding stocks, bonds or assets. Just imagine this. Let's say as an example, you are giving me $10,000 so I will keep it safe for you. As a bank, I only need to hold $1,000 of this money in my reserves. With the other $9,000, I can do whatever I want to make a profit. As long as this system continues, there is not a big issue. But the problem begins as soon as you come back to me and ask me for those $10,000, which don't exist in my bank account. So usually this is not a problem as banks get a lot of deposits every day to pay out the withdrawals from some earlier depositors. And yes, this sounds like a Ponzi scheme. So overall the problem here is that banks lend out money or invest money which they owe to someone else who deposited that money. As soon as this person asks back for their deposit, the bank has an issue. Next to lending, the bank usually uses a big part of the portfolio and invests it into government-backed bonds, which guarantee a low yield on a high time frame. This is exactly what Silicon Valley Bank did in 2021 and 2022. They have put around $100 billion into a government-backed bond going for around 3 to 4 years with a yield of 1.79%. Now, we have an interest rate of about 5% in the United States. Silicon Valley Bank has their money in a bond which only yields 1.79% over 4 years. SVB basically was on the wrong side of the bet and lost. The stock price of the bank fell by 60%, which again created new panic with the customers, companies and the investors of the bank itself. Companies and people started to withdraw all of their money from their bank accounts of Silicon Valley Bank until the bank didn't have enough money to process new withdrawals anymore. Just a few days later, the government announced that the bank needed to be shut down and the FDIC took over control over the bank and all the assets on 10th of March. The good news, the FDIC guarantees everyone in the US their first $250,000 deposits on any single bank account. This means that every account which holds $250,000 or less will be insured by the government and they can get back all of their money paid by the government. But there is a tiny issue with this. More than 97% of the bank accounts on the Silicon Valley Bank balance sheet were bigger than $250,000. That means that only 3% of the depositors could have been saved by the regulator's insurance up to $250,000. Usually this means that every asset above $250,000 will not be insured and you will not have access to it when the bank collapses. So every dollar above $250,000 is lost for the moment. This doesn't mean that it's gone forever, but it usually takes years to recover any funds and mostly you will never ever get back 100% of your funds. This usually means they won't have access to any funds above $250,000 for years or maybe even forever. This means that hundreds of companies are forced to close their operations and remove the staff from their payroll. Imagine you had raised $20 million as a tech company, and overnight you see yourself only left with $250,000. The US government saw this issue arising, and to stop a global recession like we have seen in 2008, they needed to step in. The Fed quickly decided that all depositors will have access to their money right away on the next Monday. This basically means they printed new money out of thin air just to keep the economy from collapsing. The question I'm asking myself is, how often can they do this until people lose all their trust in the financial system? For the next few minutes, let's assume the government didn't save the Silicon Valley Bank's depositors. First of all, companies who would lose their funds in this failure would not be able to pay back their loans with other banks or other financial institutions, which would result in huge losses at other banks due to the failure of Silicon Valley Bank. To cover their losses, banks would need to borrow new money from the Fed. But this comes at a huge cost right now, as we have interest rates of 5% or more. People would lose their confidence in their own bank because they just saw what happened with the other bank. Most of the people would probably run towards the bank and try to withdraw all of their funds, which in effect would cause the bank to collapse and trigger the next wave of failures. The shocking truth is that most banks in the world work with the exact same system, so this same situation can happen to any bank at any time. Personally, I'm sure there are dozens of banks out there who are facing similar issues right now, but they are not going to the public media and telling them about it. If they would do that, this is something I call a self-fulfilling prophecy. If a bank now tells you that they have similar issues like the Silicon Valley Bank, they will probably fail just because of this news. If they would publish their concerns, this would trigger the next bank run and the domino stones starting to fall. Now the question comes up. How can you prepare for these situations in uncertain times? There's a few things you can do, and I will tell you what I see as the most interesting ones. One of the key ways to prepare for the worst is to diversify your portfolio and put your money into different types of assets. This can include stocks, bonds, real estate, or cryptocurrency. Second, I think it's a great habit to have a few months of expenses very close to you as a cash reserve without touching your long-term investments or your portfolio. I think it's the most important in these uncertain times to have the peace of mind to know that you can sustain yourself and your family's expenses for a few months without having access to your banks or your investments. I know this is not easy, but this should be a goal for everyone to achieve. If you, for whatever reason, need or want to hold cash in a bank account, I would advise to use different bank accounts and don't put more into these bank accounts than what the government insurance covers. Every single bank account is insured by the government up to a certain threshold. As we have just learned, this threshold in the US is about $250,000. In the European Union, for example, this threshold is at 100,000 euro. So if you want to keep 500,000 euro somewhere on a bank account, I would advise opening 5 different bank accounts and putting 100,000 euro each if you live in Europe. Most of my portfolio and my personal and company holdings are safely secured in cryptocurrency, where I have 100% of the custody because I have the keys to the wallet. This mitigates all risks of companies, institutions, or banks, but it leaves me with the risk of being invested in the cryptocurrency markets, which I can live with very well. Don't forget that I'm a little biased with this decision because I'm working with cryptocurrency every day since 6 years. Personally, I think no regulated bank should be allowed to use such a substantial amount of their portfolio and of their customer funds to be locked away for many years. There should be more regulations in place to make sure that the customers' funds are properly diversified. Second, I think it makes no sense whatsoever to have the government insurance the same for personal accounts and corporate accounts. $250,000 might make sense for a personal account, but for large companies, this could mean that they don't even have enough money left to pay the expenses of one single month. In my opinion, the FDIC should make different cases for personal accounts or company accounts, because it literally makes no sense to cover up to $250,000 for large tech companies. But as always, who am I to judge our smart government's decisions? In one of my next videos, I'm going to explain you why I think Bitcoin could be a safe haven in uncertain times like right now. In the end, this is what Bitcoin was created for back in 2008 during the last financial crisis, and maybe it shows its effect during the recession we are in right now. To not miss this next video, be sure to subscribe to this channel, and click the bell icon to get notified whenever we release a new video. I hope you learned something new today, and if you did, feel free to smash the like button. This helps extremely by giving the algorithm the hint to push this video to more people. Let me know in the comment section what you think about the recent bank collapse and if the US government acted the right way or not. That's it for today. Thanks everyone for watching. See you in the next one. Peace.